afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute. Happy CPI day. But before I hop into it, if you're watching this on YouTube, please click the link below and subscribe. Like and subscribe. And if you're watching from a website, there's also a link below to direct you to YouTube, and you can subscribe that way. We'd love you to follow us. We'd love you to help us build our following. CPI was soft, and the markets were anticipating it. The S&P finished right around 4,000. Basically, that's where it was trading before the release. What do we have? We had year-over-year headline CPI right in line at 6.5%. This is the lowest level since October 2021. The month-over-month headline number did disinflate. We saw a negative 1/10. They were expecting flat. So that number was the real highlight there. The rest, the core CPI number year over year at 5.7% was in line. It's also the lowest level since December 2021. And then from there, the core month over month, that increased by 0.3 in line with expectations as well. About a 2% swing. The S&P sort of was melting higher prior to that number, and then we saw selling as soon as that came down. Even though the numbers were in line with expectations, you had the disinflation. However, rents were sort of a resurgence there, but everybody is pretty confident. I mean, we've talked about it. The Fed seems like they're going to be confident that the shelter prices are going to come down. KB Holmes reported at their belly yesterday, talked about cancellations. So that sort of bubble wrapped the resurgence in those prices, but the rest of the report was very soft. Inflation much softer than really people would have thought a couple months ago. So that's a sort of applauded here, and the market front ran it. So we saw the pullback low in the day, 39.54. The Nasdaq pulled back as well after the report, 11,291. But they finished near the highs of the session. They set highs after those lows, and then kind of consolidated from there. The one thing to really take away from here is the S&P is now testing the 200 moving average. It did not quite get to the gap from December 14th. This is the Fed meeting close that day. The market opened lower. I think maybe intraday open was 4,000 or below. I think it might have been below 4,000 that day. But that gap is at 40.30. High in the session, 40.21.50. Russell 2000, really the biggest gainer on the day. So the small caps really leading the way. As the economy, also, even though the data is slowing, the ISM services was bad. The economy, there's a lot of hopes behind the economy. And we've talked about the softish landing. I've talked about it in the podcast that we do, the Triple Play podcast. If you haven't caught it yet, check it out. I've been really highlighting the softish landing there. And I think that's where we are heading. The Russell 2000 small caps has really highlighted and really been able to capitalize on that, setting new swing highs on the day, but it was out above the 200 moving average. I think on Wednesday or even Tuesday, really kind of went out above that 200 moving average on the close. I think it was. So moving on, crude oil got near $80. High was 79.16. On the day, settled in 78.34. I think there's a lot of resistance as you get near $80. I think maybe some natural selling there. The dollar has weakened on the session, as you would imagine, due to the softer data, and the Fed expectations have shifted to about a 94% probability that they only hike 25 basis points now. That has hurt the dollar. The dollar has set new lows. And then it did try to make that sort of rebound when the equity market did sell off after that open. The dollar did rebound, but could not get out above, really hold 103. A regain of a regain of 103 area. But remember that mid-December low in the dollar index was 102.87. So this is now a decisive close below there. See how this builds into tomorrow. But again, the weaker dollar helps power commodities. Commodities more or less quiet. A lot of the move in commodities came overnight, and a lot of the move in the dollar sort of came overnight because the Japanese yen strengthened to the highest level since May 31st of last year on news that the Bank of Japan will look back and do a reassess distortions from their monetary policy that they've done, the ultra loose policy over the years, and maybe act within the yield curve. So the Bank of Japan saying that in a report overnight, and then the Japanese yen surged, but it did hit some resistance up there. So a lot of the movement in the currencies happened overnight. The silver strengthened overnight. Gold was basically nearing 1900 ahead of the report too. So gold traded a high of 1906, finishing near that high, just battling around 1900. Silver, that 24 area still is sticky, battling there. As we move into tomorrow, again, the dollar does continue to weaken. We do have tonight We have trade balance data from China. It's going to affect the commodity prices, copper and crude oil. They're going to be right in the forefront. And then we move into tomorrow, the fresh Michigan consumer sentiment for the month of January. What are those inflation expectations looking like? Everybody wants to see that. But today's move, not on the highs. S&P did not finish on the highs, but really a lot of their markets, everything really kind of remained very buoyant, and the dollar helping underpin that. What did finish on the highs, though, was the bond market. Bonds made highs into the close. 10-year really leading the way. Back, I think 10-year, 10-year took out that high, that quarter four high. So it's a big move there, the 10-year. Our team is here. Give us a call. We're here to help with anything on the board. 312-278-0500. Remember, futures trading involves substantial risk of loss. It is not suitable for all investors.